Ladies and gentlemen, the next session of the Huddle is Cashless in India, a roadmap for the future presented by the Hindu BusinessLine. To discuss this, I would like to invite on stage Mr. Asit Oberoi, Group President and Global Head, Transaction Banking Group, Yes Bank, Mr. R. Chandrasekhar, President, NASSCOM, Mr. Sameer Nigam, Founder and CEO, PhonePe, Mr. Sharad Sharma, Co-founder, iSpirt. They will be in conversation with Mr. Raghavan Srinivasan, editor, The Hindu BusinessLine.
Thank you. Good afternoon, everybody, and welcome to this session on Cashless India. In fact, we were having a mini discussion before walking in on what exactly we should be talking about. And I think the first point that we agreed upon was that this session is not going to be about demonetization. Demonetization was an event which happened on the journey towards developing, cashless transactions and digital transaction in this country. It triggered certain changes. It perhaps speeded up certain other processes, but many of these were already, either they had already been thought of or they were in the process of implementation. Things just got speeded up a little bit, I think, and there was also, in that sense, this change process became more broad-based and more inclusive than perhaps some people expected. So you had some people who were part of the change who had no desire to be part of this change, but they had to be because the situation had changed. But fundamentally, I think before we get into this discussion, I would like to pose a general question to the panel, just to get the starting point of the discussion. Is cashlessness necessarily a desirable goal for any economy? Is it a goal to be aspired for and to be driven by policy?
So there are pros and cons of going cashless. Cash has a certain attribute, which is anonymity, which goes away when you go cashless. And in the hands of a strong state, that can be a problem if there are no checks and balances, right? So keep in mind our citizen-state relationship is very wonky because we've more or less retained the colonial legal infrastructure, which makes the state very much more powerful in the hands of the citizen, but is unable to behave like that because, as Arun Shourie says, it's an athetoid state. It is a weak state. So therefore, there's a status quo that is prevailing. And there is a fear, and I would say even a legitimate fear, that as we give digital tools in the hands of the government, and then the current dispensation, the current government becomes, the current prime minister turns this from a weak state to a strong state, and we don't make the necessary legal changes that empower the citizen, we run the risk of changing the citizen-state relationship in a way that could be detrimental to our democracy in the long run, right? So that's the argument for not going cashless. In other words, don't feed the monster with some good, nutritious food because he will be more powerful and could do damage to you, right? That's the argument against it. The argument for it is actually very simple. We are sitting in a five-star hotel, this is all India One. Every possible brand that you think of is really an India One brand. 86 million families earning more than $7,400 annual household income a year. But, they are not the problem. The problem is, what about India Two? Another 100 million families that are between $7,400 and $3,300, of which only 1% of those families have ever received any kind of formal credit. This is despite nationalization, despite having targets for banking and financial inclusion, the system hasn't delivered to them. And then, of course, there are India 3, 80 million families who are below 3,300, need some kind of subsistence. You can even make an argument for a basic income for them. And I would submit to you that for both India 2 and India 3, cashless is an imperative. Because in India 2, collateral-based financing is not possible. They don't have collateral to offer to get financing. The only thing they can offer is their flow-based lending. This is what I earned as a street vendor last month and the month before, and therefore I think this is what my earning will be next month. Can you give me a loan for 1 month? Now, if you can, then you start a virtuous cycle, because that person we know will invest in his or her business, or invest in education, a cultural imperative, or will invest in healthcare because they know a bad health event is the quickest way to go from India 2 to India 3. So Mohandas Pai, on behalf of iSpirt, has done some analysis which is yet to be published, which sees that for India 3, those 80 million families, there are 4,000 rupees per month per family that leaves either the state treasury or the central treasury as subsidy to that family. But that 4,000 rupees obviously doesn't reach that family. The only way to kill the leakage that is there, which we know is a proven system, is direct benefits transfer, which is nothing but a cashless system. So my sense is that if we go cashless, we can ignite growth in 400 million people, 100 million families, India 2, at a time when there's no globalization taking place. That will be the biggest driver of growth anywhere in the world. There's no other pocket of the world where this kind of growth can take place. And if we can solve the DBT problem, if there's political will to do that, because the technology obviously exists, then we will completely change the human development indices for 80 million families in India. Now, so therefore, my sense is fix the laws, make the laws more equitable to the citizen, and then there is no downside of going cashless, there's only an upside. So that is my argument for your question. I took longer than expected.
Asit, would you like to come in on that, because you're from the formal banking sector, right?
The way we position it very often is not cashless, we say less cash. So that is, because in many ways, it's the customer and his needs. So if the customer wants to pay by cash, or there is a need, then you have to give him that opportunity. But like Sharad pointed out, I think there's a lot of very, very good steps that have been taken by the government, in terms of DBT, PFMS is, all the different subsidies go again through PFMS to, various people, skilled people who take subsidy. There is e-tendering that's going on. There is a new e-marketplace in GEM, which is coming in. All those things are steps in the right direction to actually ensure that there is more digitization, more cashless coming in play. So absolutely, it's a step in the right direction. It creates a lot of efficiencies. Managing cash, there's a huge cost. I think there was a statistic which came out with RBI and the commercial banks spent 20,000 crores in, printing cash and managing cash. So there are a lot of those efficiencies that come in as well. But I think the important point is less cash and all the steps you need to do. It also creates a lot of efficiencies. And I think as India, goes into the next wave of growth, there's this concept of, I think it's digital native, right? So if our kids are actually growing up using internet as they grow up, so they are effectively going to be really, really comfortable with using on all parts of India. And so naturally, they will only be doing digital payments. And I've seen that happening with the youngsters, even if they're 14, 15, and some of them, so they naturally do it because there are so many more efficiencies. Any digital payment has huge efficiency. Once you do a digital fixed deposit on net banking, you'll never go back to doing a fixed deposit using a branch network. So we as Yes Bank have done many initiatives, including, obviously we partnered on UPI with PhonePe, and there are many other initiatives, API banking, where we actually bank out of an ERP. So the client can make payments out of the ERP. And there are numerous other initiatives that we've put in place.
Wonderful. I think NASSCOM, Mr. Chandrasekhar, I think your current go-to-market slogan is 1 billion unserved. So, the 1 billion strong domestic market, which really needs to be served with technology-based services. So I think you're predisposed to be strong evangelists of a digital future, including in a cashless India. But the question I want to ask you is whether you think that the challenge of transitioning from where we are in terms of an economy which had more than 90% of transactions in cash to where we want to be of greatly reduced cash, more digital transactions, greater efficiency, greater transparency, clearer audit trails, tax compliance, etc. But to go from where we are to where we want to be, do you think, it's just the technology is enough? Do you think that technology can really sort of not only create the pathway, but also help the economy transition down that path?
Thanks, Srinivasan. Actually, the benefits, I think, of going cashless or less cash or whatever you want to call it have already been talked about. And this is not something which is a new wisdom which has dawned only now. If you look even at the telecom policy of 2012, I think this is something which was envisaged even at that time, that the mobile can not only be used for transactions or for various kinds of services or for payments, but eventually it becomes an instrument of empowerment. That's a very nice wish. There are some very obvious and I would say very major challenges along the way. So it's not going to be a smooth ride, even though this ride may have started well before demonetization. Demonetization is only a sort of force multiplier or an accelerator. So let's look at the challenges part. While I would like to reiterate that I am certainly all for going cashless as fast as possible because of the multiplicity of benefits, the challenges are several. First and foremost, is the very challenge of reliable connectivity, because even going through a transaction, you do need a certain level of reliability, which unfortunately today is not there all across, especially when you go to the more interior areas. For some of the more advanced features, even broadband may be a part of the equation, and that is something which is where the journey has only just begun. But the really big concerns that I would have are that as we are trying to get a very large part of the population, which was hitherto not a part of this whole digital revolution, not a part of the whole banking sector's customer network, they may not have even the basic level of awareness of some of the risks and precautions that need to be adopted by a user. I'm talking about some of the threats in terms of security. People need to be aware that these are some of the risks and these are some of the do's and don'ts. And I think even while teaching people how to get on board, and we've been, in the recent context of demonetization, also helping out with a helpline number. So people need to be made aware of these risks and educated on how to avoid them. The second thing is that given that there will be breaches, and we have seen a lot of the kinds of breaches which take place, because many people don't take the basic precautions of, for example, not sharing your password or simple things like that, your PIN numbers and so on. What happens when people run into a problem? Is there a quick remedy? Is there a place where they can get quick justice? I think those are also going to become very important, because as a lot of new users come in, then if they don't have that kind of confidence, there will be a problem. So can we do it through a combination of technology and insurance, for example, at lower level transactions? Can you make the transaction easier for the lower level? I think RBI has already moved in that direction by making the two-factor applicable only above a certain step. So these are, I think, some of the precautions which would be needed as we go forward. Improving the infrastructure, addressing the security through greater awareness, and looking at what can be done to bring in trust in the system and remedies when people find that things go wrong.
So I think, yeah, you raised three very critical points, and I think all of which bear discussion in greater detail. The need for greater financial literacy, the need for better infrastructure, which is absolutely essential, and equally important, a need for better system of checks and balances. But you also touched on another point, which I want Samir to comment on first, which is that all this is only part of that journey. I mean, you can have the technology, you can have the infrastructure, you can have the checks and balances, but behavioral change is the absolute key if you want to actually transition to a more cashless, more digital economy. So, and your business is particularly, I think, dependent on that behavioral change, that you give up the practice of just paying for everything with cash, which is what you've been doing, your father's been doing, his father has been doing, and do something completely differently. So how big a challenge is that, inducing that behavioral change?
I think when we talk about payments, we often assume that we're only talking about the consumer adoption or behavioral change. So we were discussing offline. The number of stakeholders is manifold. So you obviously have a very strongly regulated banking industry, and people need to be comfortable that if a solution that involves 1 billion people giving up cash and going digital is coming into play, the number of players should also be strongly self-regulated, strongly regulated, because ultimately you're dealing with people's money. But then there's also the merchants, right? Where you spend your money. And you have to figure out the right incentive models for everyone. Before diving into some of those examples, I just want to touch upon something that Sharad said, which is there's an ethics challenge here with going cashless. I don't have an Aadhaar card. I honestly don't trust the government with my Aadhaar data because it's biometric data. I have nothing to hide. I just don't know who's going to use it and why. But eventually, last week, after waiting for 4 or 5 years, I got it because the number of conveniences offered if you have the Aadhaar card has finally started outweighing the potential risk of giving up that data. And that's been true over the last 20, 25 years in the technology evolution worldwide, right? Why do we all give up so much data to Google willingly or Facebook willingly? Because at some point, your entire friends network is on Facebook and you need to converse. All your searches are on Google and you need to find stuff. In the information era, you can't be left behind. So I think every consumer at some sort of point makes these choices in their own minds. As long as they're not forced on people, I think they will make them when they're comfortable. Which goes to point number 2. Do they know the choices that they're making? Are they willfully making those? I think demonetization is perhaps one extreme. But if you look at the 3 large use cases where India has actually gone very, very strongly towards digital payments already. So large ticket, corporate transactions, payroll and all these different types of transactions between distributors, wholesalers and others have been on NEFT or RTGS for a long, long time. Why? Because the alternative is basically carrying suitcases full of cash, right? Who wants to do that? So the convenience outweighs the headache and the fact that you're giving up information. The IT department knows, others know, and it's fine. The other was remittance. So we have a population with very high population density in cities, and migrant workers need to send money. Back in the day, you'd literally send money. Like 30 years ago, you'd send money through people via, and it would reach your house, and some portion of it would reach. Now you can actually just send money digitally, and the other party can go to an ATM and withdraw it. So if you see the IMPS transactions, it's just been exploding. Every month they've been exploding. So that again tells you convenience trumps giving up some of your privacy rights, as you may. The third has been mobile recharges, right? So the whole wallet story in the last sort of 36 months, everybody's got a phone, feature phone, smartphone, doesn't matter. If you have to do a recharge, being able to do it digitally saves you the pain of actually going into a shop. I think 5 years ago, everyone used to walk into a shop with these signs, Airtel, Vodafone, like they were just everywhere. So again, convenience pips it. Now, when you start talking about retail, when you start talking about tolls and trains and metros, there's still a ton of sort of cash transactions happening there every day. If we want people to really start adopting digital, the burden is on us as an ecosystem, definitely on players like ourselves, to make it at least as convenient as cash, and over and above that, offer conveniences that cash cannot. And that is the key. So two data points I'll share. we went in with a core belief when we launched PhonePe that the vast majority of Indians like cash because they understand numbers, they're number literate. 0, 1, 2, 5, that's pretty much your entire cash economy, right? But we felt that we have to actually offer localization, meaningful localization. And today, we see about 45 to 50% of people who are using our app use it in a different native language, which is remarkable, actually. And we've not evangelized it much. But then we find a peculiar trend. A lot of them revert back to English as the primary language. So we actually did some consumer studies. We asked people, so you started using the app in Marathi or Bengali or Hindi. Why do you go back to English? They said, sir, वो भाषा समझ में आती है, मगर भाषा पढ़ना लिखना नहीं आता है. Which is, if you think about it, why cash just works. In any nook and corner of the country, cash connects India, right? It's overcome literacy, it's overcome regional interests, and we have to figure out, I think through technology, before this sort of tsunami of digital happens, well before that, I think voice will have to come in a big, big way. And I think that's when people will understand what digital transactions are doing for them. Until voice comes in, until a migrant worker or a rural farmer understands what transaction they're getting into, with whom, with what risks, in a language of their own, I think the rest is just sort of false belief. We like to believe that putting up English terms and conditions helps people. It doesn't help 75% of the country.
Sharad, I know that you've been sort of, you are evangelizing digital transactions and cashless payments as a means to an end. And one of that is actually driving this whole process of financial inclusion. Financial inclusion does not end with creating a Jan Dhan account. You need to be actually part of the financial ecosystem. You need to get some credit. You need to be able to give that number that less than 1% of India 2 gets credit. So forget India 3. But in that process, this whole, this mountain of one of the pros for this is that it creates this data stream. It creates monetizable data for consumers. That my transactions, if I run a shop, my transactions, my cash flow then becomes my collateral against which I can borrow. That's the premise of flow-based lending. But in practice, the traditional system has been really slow to even, move on this direction. And I would like Asit maybe to answer that question. For instance, it's not as if we've had no data in the past. We've had, if you take consumers also, we've had fair amount of data. We have 25 years of credit card history for many people in that top, 1%. We have CIBIL for several years now. But does that get you anything as a consumer? It may get you a loan granted, but doesn't give you any added advantage in rates just because you have a better score, at the retail level. So, is the system ready to actually mine and utilize this data? So I'd like both of you to sort of...
Sure. Yeah. So, let me start with this. If Graham Bell was to come back today, he won't recognize the communication system he left behind. But if he came back in 1995, he would have recognized the system he left behind. But if Edison, who was literally his contemporary, comes back today, he'll recognize the distribution system that's left behind. So why is it that communications industry changed more in the last 20 years than it's changed in the previous 50 years, while electricity distribution has not changed? So the fact is that the car industry will change more in the next 10 years than it has changed in the last 50 years. Banks is going to change more in the next 5-10 years than it's changed in the last 50 years. So let us first of all not make past the predictor of the future. That is a fallacy which is no longer appropriate. If especially we are in a world where we know that the banking and the financial services system worldwide is going to change dramatically in the future, right? And remember, India embraces change. Mr. Chandrasekhar was part of the telecom revolution. Who would have thought, even you wouldn't have thought when the whole thing was getting underway, that it would happen so quickly and at this scale? Who would have thought Aadhaar would be the quickest system to reach 1 billion people even faster than what WhatsApp was able to achieve? So remember, India has enormous capacity of absorption. And let us not first discount that. Having said that, so first of all this change is going to happen. This change doesn't happen by accident. We are February 12th. He was there on February 11th in another hotel was the launch, the technical launch of UPI that happened. In that launch, there were 321 entrepreneurs that came. And like with him, we had to restrict one person per startup. How many VCs came? One. Alok Goyal. So we were teasing him, Alok, why are you here? What happened to all your friends? And he says meekly, he said, I am not here as a VC, I am here as an ex-Googler. Right? So now, a year ago, the VC community of India didn't believe in this change that you're talking about. Now they're scrambling one after the other to find, Samir Nigam type startups to invest in. So don't go by this notion that history is a predictor of the future. When it comes to non-linear change, periods of non-linear change, humans are not wired to understand non-linear change. You go back 100 years, there was nothing in human existence that taught us about non-linear change. Today, we are dealing with carbon emissions being non-linear change, growth of UPI is non-linear change. So let me give you one number which I shared in this hall on Monday. You were there. So if you go to December 15th, if you take the wallet transactions, the wallets which have already committed to go fully UPI, and the UPI transactions, that day 6 million transactions happened. 18 million debit card transactions happened. On January 13th, that volume of transaction had grown by 32%, by value 22%. On January 14th, it crossed the halfway point. And we are now looking at, even though demonetization, cash pressure has gone away, certainly by April 1, the number of wallet UPI transactions that are happening will exceed the debit card 18 million transactions a day. Now, debit cards have been around for 25, 30 years. And yet, within, the whole system was launched. When did you launch your PhonePe app? August. 28. August 28. In less than a year, it would have overtaken something that was put in place for 25, 30 years. Now, we don't comprehend this. We don't appreciate this. So now, this is the same problem that we have with the Aadhaar. Why do I need an Aadhaar? Because he could get away for so many years without having an Aadhaar number, because he has a passport, he has a driving license, he has a PAN card. He doesn't need an additional identity. But I can tell you the house help that he has must have had an Aadhaar card many years ago, because they didn't have that benefit. So let us not look at this through our lens of India 1. India 1 is not a proxy for what is going to happen in India 2 and India 3. India 2 and India 3 need digital technology before they get anything else. And this is a very corny formulation, because nowhere in the world is any country using digital as a basis to solve the problem at the bottom of the pyramid. Even in the US, digital is a technology meant for elites first. That's what Apple believes. That's why Apple is the most valuable company in the world. They have no interest in India 2 and India 3. So this is a completely corny paradigm that we are trying to implement as a country. And if we succeed, we will become the beacon for the rest of the world, because this is what the world needs. If we fail, people will point fingers and say, hey, you guys messed up. Well tried, but it didn't work. Yeah, so now we can come back and discuss what will it take to succeed. But the desirability of success and the possibility of success should not be discounted, because that, I think, is very unfair to ourselves. We as a nation must have more confidence in ourselves.
So is the system ready to allow this success to happen?
Sorry,
is the traditional system, I mean, you're part of the financial system, you run a bank, you're supposed to be driving this process, actually. Is the traditional financial system, the whole ecosystem represented by banks and RBI and the Banking Regulation Act and so on and so forth, is it actually not only prepared for this change, but even willing to allow it?
Okay. One very important point, which I think we've covered, but I want to just elaborate a bit more, is India is a very vast country. And you will need multiple different systems and solutions here. So there will be a lot of people who will not have smartphones. So we came up with an app whereby you can use a feature phone to actually make payments. SIM sleeve, you just need to attach that to the phone, to the SIM. So similarly, there have to be a lot of innovations to actually do that. And we also need the infra to cope. So for example, one of the things that happened post-demonetization, there were just no POS terminals available. I mean, there was a huge shortage of that because we've hardly done any. The POS number is very small. So, and there was literally a scramble to get them in. Now that's much better now. But just based on the vastness of the country that we have and the rural split as well, so you'll need multiple different solutions. You'll also need some degree of project management. There will be certain segments, certain parts of India, for example, the rural mandis and some of those areas, which will need solutions to get rid of cash that is there. There's a lot of cash moving, so to move to less cash, you will need a different solution. You'll need a lot of project management to actually get there as well. So there's a lot of different thinking that people will need to put in play. So I think different stakeholders, and I'll say the corporate and retail, I'd split them into two, because obviously there are retail consumers, the merchants, and the kirana stores, and then there are the corporates, which has the whole ecosystem. They will all need to partner to actually digitize the whole process.
Yes.
Incremental to that, specifically to your earlier question, are we ready for it, the whole financial ecosystem? I think we are. If you see literally every ad that is coming, including one or two I saw in Bangalore, all the banks are talking about a digital branch and a digital economy. So the banks are ready for it. And I think individuals too are getting ready. The education has begun. So my driver, for instance, never had a bank account. Now he's very happy he's got one open. He realizes now that there is some value of just having all his transactions go through his bank account. So tomorrow if he wants a loan, there is some history of all his transactions. Similarly, there are other changes happening like we were discussing earlier, where there is TREDS which has come in, where vendors can actually, to corporates, when they give bills in, those bills can be accepted by the corporates and then those get discounted by banks. And so they'll get money up front and the money comes from the corporate on time, and the best efficient interest rates come in because banks bid for that. So there are a lot of changes happening. I think RBI is very, very supportive. I think there are a lot of committees that have come in place. I think the whole country realizes now, and they realized over the last several years, I would say, but this kind of worked like a fillip, that this creates more efficiency. Why digital? It's not because it's fashionable, but because it is a lot more efficient. Ultimately, when you go and take a loan, and you have 3 banks giving you different rates of interest, you'll go for the one which has best processes, simplest, but more important, which is the cheapest as well. So similarly, this is the most efficient way to transact. So that plays a very big role, and I think the whole ecosystem in banking, from RBI to all the banks, they're all supportive, and we are all partnering to see what are the best solutions that can come and play.
Sharad, you wanted to say something, then I'll...
See, before we go, see, there are 8 players here. There are 3 types of banks. There are these new banks like Ujjivan that we talked about, right? New players that are the payment banks fit in that category. Then these are emerging banks. Yes Bank is clearly in that category. And then there are incumbent banks, and many of them are public sector banks, right? I mean, ultimately, 70% of the liabilities are in the hands of the public sector banks. So you have these 3 entities. Then you have entrepreneurs like PhonePe that we are talking about. Then you're talking about RBI. You're talking about government, right? And I could go on and on. Now, the point is, for any system to work that has to embrace all of these players, doesn't happen by accident. The fact that Yes Bank has the highest market share in the UPI market is not by accident. It is because the system allowed for non-incumbent banks to dominate. And they were smart enough to understand this and embrace an entrepreneur who knew what he was doing. And therefore, they are the market leaders today. Now, I don't think this is by accident. This is by design. And Sameer knows this, right? And so why is it by design? So all I'm trying to say is that when you're talking about complex change of this kind, where there are 8, 10 players, large players, including the government involved, you need an architect to make that happen. Without a good architect, change will not happen. We end up discussing only the tactical issues. We don't understand often the architecture. So I leave on one thought. Today, I might as well tell this story if you give me 2 minutes.
Yes.
So if you go and look up the youngest, I won't mention his name because you'll figure it out. There is a payments company in the US run by 2 brothers. The younger of the 2 brothers holds the record of having turned a billionaire at an age younger than when Mark Zuckerberg turned billionaire. In fact, he holds the record of being the youngest person to turn a billionaire. He reads about UPI, goes and reads a 230-page UPI architecture document, and decides to come to India, has never been to India, arranges for a visa, uses his investor to arrange for all the meetings, and arrives here. Why? Because he says, look, all of you have experienced a 404 error in internet, but unused error of internet is called 402 error. 402 error is your payment didn't succeed. Because the vision of internet was you can send money to another person like you can send email. Today, other than India, which is UPI, if I know your, for example, my UPI address is Sharad S at UPI. Any one of you can send me money if you so like.
And he'll be happy to receive it.
Using his app or using one of the 36 other apps, and we have another 130 in the pipeline. So using any of the 100 apps, you can send me money at 4 p.m. using one app and 4:02 p.m. using another app and 4:05 p.m. using another app. There is no restriction at all.
Yes.
This system does not exist anywhere else in the world. So that man, that company which does not operate in India, in this last 1 month has opened an office in India because he says, if I have to succeed in my home market, I must operate at the cutting edge of where the payments is in the world today. That's just the technology architecture. But you now need a business model architecture, regulatory architecture. We completely discount that when UPI was launched in August of this year, that architecture had been in the works for years at end. And the quality of that architecture will determine whether all these things happen or not. And of course, I have a reason to believe that it will happen, take it with a pinch of salt, but you are the person who's dirtying his hands in this, and therefore we can hear his perspective on that. Yeah. But this is what causes large-scale change. Yeah. It does not happen because somebody in North Block or South Block issues an order. They're one of the 8, 10 actors in the whole game. There is an architect. And nowhere in the world is the government the architect of a system. Even in Singapore, for heaven's sake, it doesn't happen. That's why even Singapore lets the architecture of change happen in the hands of think tanks. And we, therefore, have to nurture and create think tanks. Because think tanks are the ones world over that make that happen. Nowhere, even DDA wants urban design, they give it to a think tank to make it happen. Yes. So that is something that we have to embrace and understand, and then will we be able to appreciate the change that is coming
I think that sort of sets it up nicely for the last question that I want to ask the panel before we throw open the session for questions from the floor, which is next steps, right? So we've sort of looked at the potential rewards, we've looked at some of the challenges. We're already, going down this road at breakneck speed, like it or not, changes upon us. Either we embrace it or we hang on to it or we fall under. But what ideally speaking, what should be the next steps in terms of policy changes which are required? What are the next steps to address the many infrastructure challenges that Mr. Chandrasekhar pointed out, among other things? And one of the constant replies that I've been getting when I've had conversations with players in this field is that, look, we can solve problems which we are capable of solving, but I cannot build a network tower somewhere just so that, my system, actually my transaction gets completed, right? That's not within my ambit. So who's going to build that tower? Who's going to ensure that connectivity? Who's going to give you that 99.99% uptime in systems, which you need to keep this, avoid this 405 error, did you say? 402. 402 error. So How do we do that? What are the next steps? So perhaps you could start off, Samir.
So, often like to use this phrase, in times of war, great artists and musicians emerge. In times of peace, great architects and engineers disrupt the world. What's really happening here, if you look east or west, is we're talking about the advent of what's called the fintech industry. Now, obviously, technology has been the backbone of the core banking systems for decades now. Why are we talking about fintech? What's really happening here, as Sharad said, there's teenagers, there's 20-year-olds, there's people who've never worked in the banking industry, to be sure, who are basically saying, I don't like how payments happens. These are the same breed of people who 10 years ago said, I don't like how social communication happens, I don't like how search happens, I don't like how text messaging happens. And when there's a critical mass of those people, I think change is inevitable. Now to your question, infra and regulation. In my mind as an engineer especially, I would say that the less regulation you have, the faster the infra will emerge. Because if the guidelines say these are the things that are not desirable, these are the things you should avoid, and leave it at that, all the stakeholders will enter and positive disruption will be faster. To your example, in fact, I believe that there will be market players who will say, I will build the towers. I believe that there will be people who will say, I will lay the cables. There will be people who will say, I will sell solutions to consumers. That's exactly what happened in the telecom industry, by the way. That's exactly how Aadhaar has grown. Don't over-regulate and try and tell smart young people how to make payment adoption happen. Tell them exactly, by the way, why I love UPI. It says, these are all the precautions, these are all the safety measures, these are all the guardrails. Now go innovate. And I think we are at the cusp in a market that is young, very eager to try things on their smartphones. In fact, most of the Indian population that is on a smartphone. It is their only entertainment device. It is their primary communication device. It will become their primary payments device if we can freely innovate. And I think that's definitely happening. Yes Bank's been a fabulous partner to us. So I think there's a lot of sort of stories about incumbents and startups or the banking companies versus fintech companies. I think an equilibrium will be reached sooner than later. It's more a question of who decides to enable that new equilibrium and who's dragged into it. I think that's going to be the difference between who survives and who doesn't.
Mr. Chandrasekhar, any learnings from the experience of the IT sector, which actually was the flag bearer of change and transformation till the new sort of digital players came along. So what can we learn from, we talk about regulation, there is a very strong argument for the case that the IT sector grew because there was no regulation, right? But once you grow to a certain size, you do need regulation, you do need sort of systemic support architecture in place. So, so from the kind of experiences that we have had in dealing with change, in driving change on a large scale, over a compressed time frame, what do you think needs to be done?
I was actually, curiously enough, going to lean a little more on the telecom sector to see some of the key learnings from the past. If you see, we have all agreed that, what we are witnessing is enormous change, number one. Number two, we are also seeing change happening at a pace which we have never experienced in the past, whether in outside India or in India. If you look at the telecom sector, the biggest revolution that happened in India was the mobile revolution. The broadband is something which we are still waiting for it to happen, but the mobile is something which has by and large pretty much happened. And in all of a little over 10 years, we went from, a few tens of millions all the way up to 1 billion phones. So that kind of growth, why did it happen? What was the trigger? It's not that it happened just when, when the mobile phone arrived. It had been around for some time. Number one, the price point dropped to a certain level of affordability. But number two, and arguably the most important factor, was the fact that policy changes took place which allowed unbridled competition. And that really drove the spread as well as further optimization of the cost, with arguably very little or no technology innovation being a part of that. The current revolution that we are seeing and hoping will carry us into that future where India 2, India 3, etc. will all be part of it, depends also on technology and depends a lot on innovation, because there's a lot of innovation which is also needed. It's just not just a question of applying known technologies as was the case in the telecom revolution. Fortunately, at this moment, we happen to be also witnessing that revolution in India of a lot of startups and a lot of innovation becoming a part of the ecosystem. So therefore, the key question is, how do we ensure that all of the players in this ecosystem, the innovators, the entrepreneurs, the startups, also have the same access to the opportunity, and that they are not stymied by regulation or by some other monopolistic behavior which prevents more efficient solutions from replacing the old ones. Regulation is one obvious answer where, in fact, in the recent Huddle committee report, one of the key recommendations was that it must be ensured that newer, more efficient technologies replace older ones without worrying about, the older technology. We have to give it some time for it to earn its, earn the money back and so on. That's one. The second is that, here we've seen an example of a bank and a technology solution provider coming together in a partnership. There are many other instances that we know both in the financial and non-financial sector where the disruptors and the raiders, digital raiders, have come from completely different sectors. So in the regulatory system also, we have to be very careful that the regulator does not see it as incumbent on the regulator to protect one sector from the ravages of a new attacker. So I think the regulatory system that we are putting in place needs to ensure that that happens on a continuous basis. And I think the recent announcement about the Payment Regulatory Board is a good step in that direction. Although there could be an apprehension that since it's a part of the Reserve Bank of India structure, it could see maintaining the viability of the banking system as being a higher priority than making room for new and more effective solutions. So I think this is where we really need to ensure that this regulatory framework is a level above a particular sector, because it's now straddling these sharp dividing lines. Oh, this is banking sector, this is technology sector, this is communication sector, are all blurring. And if the regulation is then divided on those lines, then we could have a problem. So I think the announcement that was also made by the finance minister saying that yes, we are going to look at comprehensively at the Payments and Settlements Act is also reassuring in that context, because it indicates that there is an awareness that if you don't play the regulation, if you don't structure the regulation properly, then that could become one of the stumbling blocks. Lastly, I would agree that, with what Sharad said some time ago, that, for all of this, you need to have an architecture. But to my mind, the architecture is more in the form of a game plan or a framework which people can get onto, and they know that once I comply with that framework or I'm a part of that set of standards which have been laid down, then I will be able to integrate with everything else. But not as a blueprint which people will follow, because I think a lot of this is going to happen from ground up and not necessarily as a part of an orchestrated design which is done centrally. I think especially in a country like India, but more particularly in the kind of rapid change that we are seeing, we have to keep that balance between, in a sense, trying to guide the change, but with a very light touch. So regulation with a light touch is what I think we need in this.
Well, I think, regulatory conflict is something, at least as far as the RBI is concerned, I think they have a lot of experience with that. They are the monetary authority, they are the banking regulator, and also the banking to the government. And so far, so they've managed to sort of walk the fine line between these things. But Asit,
But if I can just add, sorry, if I can just add one. You know, it's true what you said, but there does come a problem when the regulator also becomes a player. And there are instances of that. Yes. Now, you see, for example, if there are some very good initiatives by the government, like RuPay or like the Bheem and so on. It's very good in the short run, but in the long run, I would worry where the regulator or the policy maker becomes a player, because inevitably that distorts policy making and regulation at a later date.
certainly.
Yeah, I would just maybe some concluding comments from my side. You know, when we started as a bank, people would come into a branch and do banking. Then we moved to internet banking, where people would use the net. There would be different host-to-host payments and other things. Then we moved from there to something called API banking, where you can, from your ERP, do all your payments. You don't need to get into net banking. You can even fetch your balance from the ERP. So I think similarly, I think the nation is evolving. UPI, all the other changes that are coming in, Bheem, other Aadhaar-based payments will come in fully. So there are a lot of changes happening, but the most important thing, the way I see it, is the whole behavioral change that needs to be managed. There was a large retailer I was talking with the other day. He said post-demonetization, his digital transactions has shot up from about 45 or so to 80, 85%. Then it dropped again to about 50, 55. So now we have to all work towards a process where it becomes easy for people to use, the regulations become simple, and ultimately, you know, this creates more efficiency for everybody. So we would hopefully, in that same retailer example, hopefully in times to come, that will be 90, 95. It may never be 100, so always I say less cash. But I think the whole ecosystem has to partner to see how we can get there.
Thanks. I think the timer has run down to 0, so I will quickly go to the audience to, for questions. Just one request, please identify yourself, try to be as brief as possible, and if possible, address questions to specific panelists. Yes, gentleman in the front.
So my name is Sumit, and this whole idea of a digital and a cashless economy is very seductive. But we everyone here would know of an educated spouse or relative or parent who refuses to use credit cards on the internet because they fear being scammed. So I'm thinking about a daily wage laborer in a digital and a cashless economy who needs to be paid. And his master says, yaar, PhonePe kya hai? Yeah? Or Paytm kya hai? And I'm just wondering whether it will become the digital equivalent of the check is in the mail. I wanted to get your comments on that.
I think this is again a metro myth. We also used to have that myth, and then we had this wonderful, completely spunky lady, Pratibha Shastri, who decided to do this digital Desh kind of journey. So she started from Amritsar to Kanyakumari, then she did east to west. A few days back, she's finished northeast. And actually on the ground, you are astounded by what is the mobile revolution that is coming. See, we have lived through in the last 30 years by 3 revolutions that have washed over all through the country. In the mid-80s was satellite television. We had television for 20 years before that. And then in 5 years, it just swept through the country. Then, as Mr. Chandrasekhar said, he was one of the architects of that whole mobile revolution. In 5-7 years, it swept through the country. All of us have been part of the Aadhaar revolution. So please remember, there are 3 revolutions that have happened that embrace everybody. All that I'm telling you today, that in the next 5 years, the next 3 revolutions will happen. It took us 30 years to get the first 3 revolutions. It will take us now only another 5 years, although they've been cooking for the past 5 years. In 10 years, we'll get 3 more revolutions. One is the payments revolution, because we've learned from the previous ones to get them right and better every time. And you're not appreciating the GST revolution. We will be the largest commercial system in the world by end of this year when 5 billion invoices flow through the system every month. And you're not appreciating next year when bill pay and fast track and electronic toll collection systems come, because they're also open API, our logistics will change at a rate that nobody is appreciating today. We have 3 revolutions that will sweep through the country in the next 5 years. You know, and believe me, they will happen. It is not that our Indians are not able to embrace these revolutions. This is a complete Western educated, public school education, living in Bangalore. I'm talking about myself. I used to be like you. Please get rid of this. This is it is no longer fashionable to state this. I think it betrays ignorance. It must be abandoned as quickly as possible.
There's probably a fourth revolution brewing somewhere as we speak, somewhere within some parts of India. It's a question of people getting used to using the new technology. And there are frauds. It's not that there are no frauds. And the US probably has more frauds than, in many other parts of the world. So, but still, they are probably more digital than we are. So it's a question of getting used to it, getting comfortable. And there are so many efficiencies that will come with digital. And the example I gave earlier on, the modern technology to actually bid for loans, some of those are going to reduce interest rate costs in all parts of India as well. So there is a lot of efficiency that will come.
I'll also add to that a thought. So in the example you mentioned, rural farmer, for example, is being told by somebody, I'll pay you using PhonePe or Paytm, and the analogy is the checks in the mail. Think about it the other way. Now you actually have businesses that are for profit in the public domain who you can challenge. And therefore, the burden is on us to actually build better, tighter, secure systems. Because one scam in India is just going to basically get on national television. In that environment, do you fancy your chances of having less scams, or one where everyone's using cash, where the currency itself gets compromised? We keep hearing about counterfeit notes. Or one which is heavily regulated, yet nobody knows how to use. So again, you're at the mercy of the sahib telling you what works and what doesn't. We need to democratize and empower people. And there's a reason why, for example, wallets are taking off like nobody's business. It's the most unregulated payment instrument in the country with the highest rate of growth. So the country is telling us something, and I think it's time that we just said, let's add the right level of security protocols, but let that innovation continue.
All right, so I think I'm getting signals from the wings, so we have overshot our time quite a bit, but very engrossing discussion. I thank all my panelists for this really engaging conversation, and look forward to many more. Thank you.
Thank you, gentlemen. I now request Mr. Raghavan Srinivasan to hand over mementos to our speakers. Ladies and gentlemen, presenting to you from the archives of The Hindu, the very first editorial titled Ourselves that was published on September 20, 1878.